And good morning, everybody. It's Wednesday, June 11th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you get any questions or comments, please feel free to drop us a line in the chat area. I'll be sure to get to it during the show. Overnight markets here: July corn up 5.5 at 444 and a quarter. July soybeans were up 3.5 at 1061 and a quarter. And July Chicago wheat was up 4 and a quarter at 538 and 3/4. This morning we had consumer price index was out. Up 0.1% in May, which was better than expected. Annual inflation rate stayed steady there at 2.4%. That was in line with expectations. Rallied the outside markets here a little bit. Dow's now turned positive, up about 35. S&Ps are up 11. We've got news out this morning with regard to China and the United States. It appears we've got the framework for a deal. The Geneva Consensus is what they're calling it. It now goes to President Trump and President Xi to approve the framework of the agreement. Heavy focus on rare earths, it appears. There was some verbiage from President Trump on us getting 55% on the tariff side, China getting 10%. Devil will be in the details, so we'll have to see what comes out as we learn more and more about what has been discussed. Nothing directly tied to ag at this point that we know about. Markets this morning were positive, certainly I think on the easing of tensions and some semblance of a deal. Looking at weather, we got it looks like pretty good rains here over the next 7 days. However, the Euro and the GFS models do appear to start agreeing on a drier forecast for kind of the central and western parts of the growing regions, Iowa in particular. So I guess we'll start there. I know Justin made a point this morning. We're starting at a pretty high, good to excellent category for Iowa. So, I guess any trouble or dryness, kind of least path of resistance is kind of lower. So that'll be interesting to see how that shakes out. But Justin, maybe a few thoughts here as we look at the markets and kind of some of the things we've discovered here this morning, and we'll throw it around the room.
Yeah, Dan, I think, we're still in this kind of choppy trade. We yesterday in corn, beans kind of trying to press below some of the recent lows, and it failed, kind of rallied. Now we're, kind of going back above moving averages or testing them again. So we've been in this pattern. We get towards the high end of the range on, kind of friendly-ish news, and then weather models flip, and we go test the lows. And so I still think we're trying to find support here. I mean, we are, June 11th, and I know seasonally that's when we're usually topping, but we're already trading kind of really bearish stuff this whole spring, I'll call it. We've had good planting. Crops look pretty good right now. The weather's been non-threatening. So I think we talked about a lot yesterday. Spreads, flat price, really, no matter how you look at it, you've kind of factored in a lot of bearish stuff. And if it all comes to fruition, then we'll see lower prices at harvest most likely. But time of year and, just a little bit of uncertainty when you're starting out at some pretty high expectations on the crop. I think it's pretty easy to see these kind of short covering rallies. And, if the models continue to get drier, or, we got some trade deals going on with China, just some more positive stuff. It's easy to have rallies when everyone's kind of leaning one way. So there's certainly not a lot of optimism out there in the space, I don't think. There's a lot of hope out there, but not a lot of optimism. So I think, any positive news is always welcomed, and see where we go from here.
Sure. Ben, what's on your mind this morning?
I thought yesterday we trying to press those lows. We made new lows in July. We equaled the other old lows, recent lows in the December contract, and markets fought back a little bit. Today's the fourth day of the Goldman roll, and after tomorrow, the offer in July, the kind of structural offer will be gone there. There's a lot open in the 450 and 460 lines in July corn, and I look at it and think, big. Justin mentioned it yesterday that the seasonals are that we start to bleed out, but this has been a counter seasonal move heading into this. So I think you just have to be on kind of on guard here that some things could change quickly. Um, Even that aside, you probably have fits of short covering if there's something you need to do. Uh, Looking around, CPI data was inflation edged higher. Maybe opens the door later for a little more aggressive action with rates. Um, I, I see the bigger picture, maybe a little bit possibly turning, but again, time of the year makes it kind of tough. So we'll see how this shakes out. I think all eyes will be on the data dumps that we see in the WASD. I wouldn't expect a lot of changes there. And then ultimately the end of the month with quarterly stocks number and updated acreage. So
Very good. Dustin, what's on your mind this morning?
Yeah, I think, positive news with U.S. and China is definitely something the market will take notice of today. We've had an early, it was just announced early this morning, so we're just starting to see how the market's reaction is to it. We know the funds they're quite short corn right now. There's no mention of grains obviously in this at the moment, but we have between that and the CPI data is also pushing the Brazilian real higher today too, and pushing the dollar lower. More importantly. So I think coming off of what's been the low end of the range here the last couple of days, especially for corn, I'd just like to see how today responds. I still think one of the biggest things impacting the back end of the market is the currency moves. We have to remember Ds26. Everyone keeps talking about how bearish the market is, how low corn has been getting. Ds26 hit highs not seen in over a year on Monday. So we're very capable of kind of seeing some support at the back end, especially if there's a positive step towards doing business with China.
I was going to ask, we are going to get the USDA report out tomorrow morning. They've got the average guess for corn now below 1.4. Justin, do you think with increased exports and things of that nature, do you think that that's pretty well recepted in the trade, or could we be up for a surprise there?
You saying on corn?
Yeah, on corn. Yep.
Yeah, that's going to be obviously interesting. We've seen plenty of big stock misses on this report, 200, 300 million bushels. So it's definitely not out of the realm to see a surprise. Interesting to see kind of how weak the spreads acted with a 1.4 carryout. We got to a 10-cent carry July to Dece. Was that just a factor of things like we've talked about on the show? Just I think farmers needing to sell old crop corn once the crop got planted, free up some cash. I think a whole slew of different things happened. Funds got short. We'll see here how we act in deliveries, at the end. But I think the argument that we could find some corn, I don't think you can dismiss that. It's not like the spreads are on fire by any means. The May contract was really no good. July's been kind of a dog up until now. So, yeah, it seems like we get more stock surprises than not. So I think that's why this report is kind of important, with stocks and obviously acres. As far as a big slug of new fundamental information, I think it's a big one. So I'm looking forward to seeing the numbers. That's for sure. It could go the other way too, which would be odd for the way that the market's acted so far, but this market's been odd for a while. So
That's right.
Nothing would surprise me.
You're talking the June report, Justin, right? The end of the month.
Yeah. End of the month, not this.
End of the month.
This upcoming one. I don't, I think there'll be some tweaks to world numbers and things like that, but you really kind of need that stocks number to make a major change, I think, in ending stocks at this point.
Well, that report's always fascinating too, because as you mentioned, you can get big, big swings in the stocks numbers, but then you're coming into the 4th of July holiday, so it's by all accounts one of the most important weather weekends of the year.
Yeah. Really it's interesting. Like if you look at, a lot of people posting seasonal charts and, topping in, call it end of May to mid June. And, really the lion's share of our weather is after that, right? It's really July through mid-August or even September 1st, where the real, bushels are put on or taken off. But usually we have the seasonal, right? Because people are panicking and what if this, what if that? usually by now you've seen, oh man, what if we're a 173 yield, and just analysts kind of running crazy with, how bad the crop could be. And it's really been quite the opposite this year. I think that kind of in line with that kind of counter seasonal, pattern that we've been in, really topping in January and just being under pressure the whole year. So it doesn't take much. I mean, it's hard when you're in these situations. It really doesn't take much when things start going the other way. Those people will come out of the woodwork and start, trying to see who can write down the lowest yield and the most bullish what if scenarios. And the market has to usually rally before that kind of stuff happens. But
Yeah, very good. Ryland, will move over to livestock here quickly. Slaughter got revised lower, which I guess makes sense when you start looking at packer margins and where they're at. And then you look at hogs. We were pretty mixed for futures, but cash is remaining firm there. So I guess give us a few thoughts here this morning as we start off.
Yeah, absolutely. I mean, once again, saw some light trade yesterday at 235 in cash on the cattle side of the market. And with the slaughter starting to get revised lower, I mean, beef prices are skyrocketing. New highs in choice is up 451 yesterday, and choice and select was up 91. So, I mean, we did see a little bit of liquidation just over the past 2 days out of the August contract. And there's been some rumors that were coming across the lines yesterday, just kind of freaking everybody out. So that was kind of what that early break was about, I believe, but the market held on pretty well, just kind of bounced off the lows. So, I think, as Justin put it, we're pretty optimistic, but I'd say the cattle side's still a little bit more hopeful than anything else right now, just hoping for a 240, 245 trade, in the in the south here, maybe see stuff really start to pick up in the north, but we'll probably get a better handle on that today at some of the auctions. But overall, still, feeder market making new highs, new contract highs, open is just still gaining here. So, there's definitely a lot of concern that the thing could fall apart at any second, but it seems like there's a much bigger safety net, just kind of, or at least some support below the market for right now. It seems every sign of weakness we see just kind of snaps right back. So it's just not going down without a fight. Packer margins are a huge concern right now. And the question is how far back can they cut the slaughters, and what does that do to beef prices? Are they just going to skyrocket even higher on account of that? So typically we do see those seasonal highs at this time of year, but we are in kind of an anomalous situation right now. So we'll see if that's applicable or not. But yeah, right now it's, a little bit of concern. We didn't make a new high yesterday on the live side. So we'll see how it shapes up, if we can bounce back on a little bit more kind of cash optimism there. And speaking of cash optimism, hog market's still rolling. High side of cash is like 109.5 yesterday. So on the average was up $2.62. So hopefully we get some more details about these talks with China between the U.S. Maybe they have something ag related or not. Seems like rare earths are the focus, but there is that impression that there's still more to come with that. So hopefully we see something, but overall, it just kind of seems like cash market cutout still leading the trade. Producers are purportedly pretty current in marketings, with weights down 1.1 pounds versus the previous week at 287.2. So, it just seems like the market's kind of aware of this. I think you're pricing a lot of that in right now, and just seeing how high cutout can go right now seasonally.
So I know this isn't a big sample size, Ryland, but in the travel baseball community,
Very familiar.
A lot of big grillers. A lot of people like to talk grilling while we're sitting around at hours and hours of games. I would say over half are grilling a lot more pork chops these days.
Oh wow,
steaks.
I'd agree. Well, I mean,
it's just been a general observation, myself included. We grilled a lot of pork chops instead of steak.
We just grilled some the other night. I mean, this is there's a lot of BOGOs going on right now at the Jewel in the Chicagoland area right now with some bone-in pork chops. But yeah, I mean, it's, there's no question it's getting priced on the retail side relative to beef, but like that's where the real bang for the buck is right now, just at the meat counter. So I mean, yeah, a lot of hot dogs, a lot of pork chops, a lot of tenderloins. But I mean, I'm not gonna lie, a lot of burgers getting grilled out there as well.
Oh, yeah.
I really haven't seen, my personal burger demand really hasn't dropped all that much, even with the increase at the counter. So I don't know how you guys are feeling in this sample section, but I ain't slowing down. In fact, I
see a lot less people are going out to eat. A lot more people are grilling.
I
instead
agree
of
with
taking,
that.
I mean, taking a family out for $200 around here.
Tis the season. I
Yeah.
mean, I get it. I mean, I would much rather sit at home grilling a pork chop or a burger myself than, having to go out at this point. But yeah, I think people are starting to feel it in the pocketbooks a little bit. I mean, you can kind of see how small some burger size have gotten at some restaurants.
Yeah.
So, I obviously the economics of it make a lot more sense for the at-home crowd.
I need to talk to Jack. I think we need to start a Ryland burger index and
Okay.
have the sentiment, and see
I
where
mean,
we're at.
so far,
It might go viral.
I'm at a 3 count right now of 3.
What does that even
for the
mean?
week. So I put down 3 so far this week. So if anybody wants to step up here, feel free.
Cheese or no cheese?
No cheese. No cheese. No.
Of course not. Very good, Rye. Thanks for the update there, man. Just came into the open. We got July corn up 442 3/4. As the last July soybeans up a half right now, 10.58 1/4. And July Chicago wheat's up a penny 1/4 at 5.35 3/4. A couple things to point out again. Tomorrow morning, we will have weekly export sales, 7:30 Central. We'll take a look and visit about those in the war room. And then also tomorrow, 11 o'clock Central, we will have USDA report. So we'll be sure to keep an eye on that and talk about those numbers as well. Appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and certainly subscribe. Doesn't cost you anything to do so. And it'll keep you up to speed on everything that's going on with AgYield and Ryland's Burger Index. So again, thanks to everybody that tunes in on a daily basis. We're doing this live every day that the markets are open on X, Facebook Live, and YouTube Live, 8:15 Central Time. Appreciate the thoughts and comments this morning, guys. It was a good show. Hope everybody has a great day, and we'll talk to you again tomorrow.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.